but the dollar index is still elevated relative to those currencies. It's got to come down. The dollar value has to come down, and that's going to push gold up.
Welcome to Gold Silver Pros.
Hey everybody, this is your host, 𝘺𝘾𝑃𝑟𝑜 of 𝘎𝑠ilverpros.com. I'm recording this on Thursday, June 15th, 2023. And today we're going to talk about de-dollarization. This has been a recurring theme on our channel for quite some time. We were one of the first to cover the IMF plans to remove cash from society, and also the BIS's plans and how they're recapitalizing the banking system, including the use of gold. Well, as we march down this path of de-dollarization, the end of the dollar fiat era, and we move into a new multipolar era of competing currencies, we have another news item out that has Iran and 9 other Asian central banks stopping the use of SWIFT and the dollar and using an alternative system. And we're going to talk about that today and how impactful that's going to be on adoption of the dollar. For those people that think that the dollar will last forever or is invulnerable, I think that's been disproven many, many times. And while it may take time for the world to release its hold on the dollar, for the dollar to release the world's hold on its exclusive hold on use in international trade as a currency, as we continue down that path, we're going to see more and more of this news. And this comes from mainstream media as well as local sources as well. We're going to start off by an article in Forbes. This came out in May. Iran urges Asian partners to drop the dollar from bilateral trade. It says here, members of the Asian Clearing Union, this is the ACU, which has the 9 different Asian members that are going to participate now in Iran system, dropping the SWIFT, which include India, Pakistan, and Iran. They're launching a new cross-border financial messaging system in the coming weeks as an alternative to the main existing international network, SWIFT. According to officials from Iran, which currently chairs the body, the members of the bloc agreed at a meeting in the Iranian capital of Tehran on May 24th that they would set up a new system within a month. Now, technology takes time to implement, so obviously the technology was already there. It had either been developed for someone else or something that they had been working on. The announcement comes obviously as they're ready to start adopting that technology. A quote from the article, the ACU countries decided to have a customized system for themselves, considering that SWIFT is not available to all countries and given that it has its own costs, says Central Bank of Iran Deputy Governor Mohsen Karimi, and comments reported by the Iranian state-owned Fars news agency. Well, why are these countries doing this? Why are these 9 Asian Clearing Union countries adopting Iran system over SWIFT, which has been the standard basically as long as we've been doing wire transfers in the modern age? And that's basically because the U.S. sanctions on Iran and other countries are preventing some of these countries from using SWIFT, and so they had to develop their own system. Of course, Iran and Russia are developing their own systems as well, as we've talked about. And what we have now is a collection of regional systems popping up to replace SWIFT as a de facto international system, much like these other currencies will replace the dollar as a de facto international currency. It's the same thing. They're just setting up the processing networks. But in these processing networks, they're not using dollars. They're using alternative or other currencies or local currencies. And in one case, I believe China and Russia are setting up a completely alternative international currency that has a gold component. Another article here, this time by the Islamic Republic News Agency, Iran's CCPM to replace SWIFT in trade transactions, says the ACU chief, the Asian Clearing Union. The Secretary General of the Asian Clearing Union, according to the article, says Iran's financial messaging system CCPM will replace SWIFT, a dollar-based international system, in trade exchanges between ACU members beginning this month. Farhad Morsali said that Iran's CCPM has been accepted by ACU members as an internal financial messaging system, according to a Saturday report by Fars news agency, once again quoting the same agency. He said it will take 6 months for the union's own messaging system to be ready, and in the meantime, the members should replace SWIFT with CCPM, for which Iran will charge a fee. This is according to this news report. Iran unveiled CCPM in October 2013 as an alternative to SWIFT, SWIFT being a Belgian-based financial messaging system that is being gradually abandoned by countries because of its sheer reliance on transactions that are based on the US dollar. So this is an admission by the ACU and their members that they're getting rid of SWIFT because they're getting rid of the dollar. Right now they're sanctioned, but because the dollar was so dominant and they want a different system, they're going to go to a non-dollarized based system. But included in that are all the technology that allows for the free flow of that capital around the world and that currency around the world. And SWIFT is being replaced by CCPM. Iran's CBI governor, again quoting from the article, Mohammad Reza Farzan, said on May 24th that the bloc will diversify the basket of currencies it accepts for payment settlements to help the global de-dollarization bid. They're talking about it very openly. We're getting rid of dollars. So I thought I would take a moment and go research the data on whether the dollar is still being used in international transactions. And the best way to do that, to determine overall demand and supply, or so demand and stock and flow, if you will, is looking at who holds dollars as foreign reserves, or what percentage of overall foreign reserves are held in dollars, meaning foreign reserves, meaning outside the United States, who's still using the dollar. Well, we can tell that by who's got the most, because they have them, because they need them in transactions. So they're going to hold dollars where they need them. If they don't need them, they're going to exchange it for a different currency. But they hold dollars where they need it for dollar trade. So by looking at the trend of foreign dollar holdings or foreign exchange reserves in the dollar, we can tell how much of a percentage of transactions are used in the dollar and are to be expected to be used, and we can look at that trend. Well, how about, as you know it, the IMF has a nice little data table. Now it's just got a year's data in here, but I'm going to show you a longer term version of this in an aggregate sense, just in the dollar terms. But this one's cool because it also shows us from 2021 to 2022, not only how much less the dollar is being used, but other currencies are being used more. And you can see the pull away from the dollar into these other large international currencies is very clear. So here's quarter four, 12/21. This is in billions. So we're going to quote total numbers in trillions. Total allocated reserves, 12,919 billion. And in US dollars, it was just over 7 trillion, 7,085 billion. That's quarter four of 2021. I'm reading on this line right here. But you can see a year later, quarter four of 2022, that had dropped by over 500 billion, actually 600 billion to 6.4 trillion. So that trend over the year is that US dollars and foreign accounts that were being used to affect trade had dropped, getting close to $1 trillion, about $700 billion, give or take. So getting close to $1 trillion in just a year. And I'll show you where that trend has continued past 2022 in a moment. But I wanted to show you, using this chart, some of the other currencies that are in play as well. So you look at the claims in euros went up from 2.2 trillion to 2.4 trillion. If we look at the renminbi, it went up from 298 billion to 337 billion. The Japanese yen from 610 to 665. The pound from 548 to 579. And Australian dollars from 217 to 221 billion. And Canadian from 263 to 286. So the loss of about $700 billion in foreign holdings of US dollars was made up in these other currencies. So the trade is still there. Now, there is some reduction overall in international currency trade. You can see from almost 13 trillion to almost 12 trillion. But even though the dollar was falling, it wasn't just because people were using less overall. Some of it was shifting to these other countries. So I think that you have to look at that data as well to see not only is the use of the dollar falling, that could be worldwide deflation. We just need less to facilitate trade in a deflating environment. But it's not just that. It's that these other countries are taking a lot of this demand in their currency. And so their currencies are now starting to be held by other parties as foreign exchange. A lot of euro, Chinese renminbi, Japanese yen, pound sterling, Australian dollars, Canadian dollars, and not as much in Swiss francs and other currencies. So you can see a lot of these other big time sovereign currencies being used more and being held in reserve as the world de-dollarizes. This is straight from the IMF. Another IMF report here on their website, their blog. US dollar share of global foreign exchange reserves drops to a 25-year low. Again, this is a 2021 report, but you can see it went from 70% to 60% from 1999 to 2020. Coincidentally, the price of gold during that time frame actually went up a lot. So there was a lot of investment in gold with some of the US dollar reserves, but also the use of other reserve currencies as well. So if you want to know where some of that money came from. And in this chart's really good because it shows, I'm going to blow this up just a little bit for you guys, so you guys can get a little bit better look at the overall chart. And then it shows some of the other ones, you know, increasing. You can see the use of other currencies increasing from almost 0 to 10%. You can see the yen went up quite a bit. The pound sterling, you know, went up just a little bit. The dollar fell. And then over here on this chart, you can see that the overall amount of dollars had fallen, that the exchange rate adjusted. It really hadn't changed yet, but the US dollar index stayed elevated. So my question is, if the US dollar index, the DXY, is a measure of the dollar against other currencies, and the dollar is being demanded less internationally, by that table of data and by this table of data, okay, quite a bit over the last few years especially, but quite a bit also dating back to 2000, 1990, 2000. This trend is now 2 decades old. Why is this dollar index staying elevated? Is this the last amount of confidence that we have in the system? What I suspect is going to happen, people have way too much confidence in the dollar, and that dollar's got to plummet to match the amount of other currencies are now filling the international marketplace, being used in de-dollarization transactions, being used outside of SWIFT into other systems like CPM and the Russian SWIFT system and the Chinese SWIFT system replacement. So the dollar is being demanded less, and yet the value is being held up. Why is that? The dollar is important in international trade, but the valuation of the dollar should fall, and the valuation of other currencies to the dollar should rise in rough proportion to how they're being used in international trade. But we've had the change in international trade going along for quite some time, but the dollar's still being held up. I think that means the dollar's overvalued and it needs to come down. The DXY needs to come down. And what happens to gold when the DXY comes down? Especially on a short-term basis, gold goes up. So as the dollar right now is being de-emphasized in international trade. Other currencies are being used, including gold, the Chinese ruble, the Iranian currency, the Chinese renminbi, the Russian ruble, the Iranian currency. They're all being used in place of, euros are being used in place of, the Australian dollar is being used in the place of, but the dollar index is still elevated relative to those currencies. It's got to come down. The dollar value has to come down, and that's going to push gold up. And I think it's going to be kind of a waterfall, because the reason the dollar hasn't fallen yet is it's still respected in international circles as being the world's reserve currency. So a lot of parties involved in utilizing the dollar are going to want it to keep elevated because they want the strong dollar. The strong dollar affects their ability to do certain things. So a lot of people are voting to keep the dollar up. But because the base of overall currency transactions, use of the dollar is now falling substantively, not only over the last few years since the COVID pandemic, but basically dating back to 1999. This has been a worldwide trend for over 20 years. It's almost 25 years old, 24 years old. I suspect the dollar valuation is going to fall, but it's going to be like a waterfall because it's a confidence-based system. There's confidence in the US dollar as a substantive currency. We're no longer backed by gold. Okay, we no longer have silver in our money. So you can't say it's backed by the value of the precious metals we hold in Fort Knox or wherever we hold them, because it's not. And so the dollar is free floating against other currencies. Well, other currencies are being demanded more and held more in foreign currency reserves. The dollar is being held less. It's being used less in international transactions based upon all these trade agreements to a very substantive level that's not being reflected in the dollar's valuation and the DXY. So the DXY is very clearly overstated here, but that's because there's a lot of confidence and because it's the world reserve currency. As soon as there's enough mass or enough escape velocity in these other currencies to where they're going to start trading outside that DXY index, you'll see the dollar fall. We're not there yet. We're not to a point in which these other currencies are used enough in foreign exchange reserves, or that another dominant one has emerged and nobody's saying we want to go to the Chinese renminbi because they know we have problems in China's markets as well. What I think is going to happen is there's not going to be another dominant one just appear right off the charts. It's not going to be the yen or the renminbi or even the ruble. I think all of those are going to start free floating, but they need a separate index. I think everything's been anchored to the dollar via the past system, and the steps for removing the dollar as world reserve currency have to occur in a certain pathway. Think of it like a critical path. If you're doing a project, what are the key tasks that need to happen for that project to finish? You could have some other tasks that'd be nice to have that are nice and important, but you want to know the critical path of the key tasks. Well, one of the key tasks is to replace all the infrastructure around the world that facilitates dollar trade. And then also another key task is to get out of some of the dollar reserves that you have, gradually reduce those without panicking the system, and gradually get out of some of the dollar-denominated US Treasury debt without panicking the system, and deleverage over time. So this is sort of the critical path that needs to occur. And once the big event occurs where the foundation of faith and support in the US Treasuries and the dollar occurs, then it's just going to crash down in, I think, a waterfall fashion, but not before we see other things first. I think we're going to continue to have to see more deflation in the worldwide economy, more crisis of the US banking system to convince the rest of the world to kind of come into some of these other trade agreements. Now, the trend has started, but we're a little early in the trend. We might be about a third or 40% of the way through the trend in terms of de-dollarization and moving over to alternative currencies. The dollar is still the largest currency held in foreign reserves. It's still the largest one used in international trade, and that really hasn't changed. Its share has clearly been eroded. Technology, people processing technology has been put into place to trade in these alternative currencies, but these other currencies aren't dominant yet. And I think us heading into the era of central bank digital currencies, when each international government will have more control over its own currency system, is when we'll be able to flip that switch and completely get out of the dollar and get out of the dollar as the world's reserve currency, paper currency. Because at that point in time, all these other nations are going to have their own currency, their own digital currency system set up. They'll have their own trade agreement set up, their own system set up, replacing SWIFT and other artifacts of that dollar dominant era, so that they'll be able to make that switch over, and those currencies will trade more in real time. I believe there'll be indexes that don't include the dollar in terms of currency valuations. All of that technology is being stood up. So as that people processing technology is slowly developed by the rest of the world to get out of the dollar system, the dollar will eventually fail, but I think it's going to be a seminal event. I think it'll kind of go down until one point it just falls off. And that will be the dollar crisis that we've been talking about the last 12 to 13 years. I believe that's a path that we're moving forward. And this is just another brick in that wall, or a cog in the wheel, if you will, of all of that infrastructure being built, that machine that's being built outside of the US dollar, the SWIFT system, and that Western system, which has been dominant, basically dating back to the last World War when it started, and especially the last 50 years since the dollar came off of the gold standard. It is that event, 1971, the dollar coming off the gold standard, which set all of this in motion, because the US then had the unilateral ability to export inflation and get first issuer benefits of that currency. Remember a show I did a week or so ago where I talked about how the first person that gets currency in a fiat currency regime gets it without the cost of inflation, because until you spend it that first time, it can't inflate the prices. That new money hasn't been put into the market to bid up the prices of the same basket of existing goods. So the first person that gets to spend that money has the advantage. Well, who's the first person that got to spend the money? The military, U.S. businesses, the big banks who get that issuance of money and put it out into society. They're the ones that benefited. The ones that didn't benefit were the American people. And then also all those other businesses internationally that got the inflation after the initial batch of money was spent, and it started bidding up inflation prices. So the rest of the world's really tired of that, and they want to go to a system which allows them to control their currency. Think back to the Russian situation. When the sanctions first came, the Russians demanded that people pay for oil in rubles, and that created intense demand for rubles, because Russia is one of the largest producers of oil. And the world needed that oil. The world didn't have other sources of oil, so they must buy it in rubles. And a lot of the world did. That created this elevated demand in rubles, which they then pegged the ruble, capped it to a certain price of gold, which kept it capped so that they didn't have a hyperinflation of the ruble. Because what they could do is they could shed off their excess rubles, the Russian government could, and buy gold. And it increased their gold reserves. It helped put a floor under the price of gold, and it kept a ceiling on the price of the ruble so it couldn't go too high. So now Russia, by doing that, by demanding that people pay for their oil in rubles, now has like a petro ruble system instead of a petrodollar system, but they use gold as a limiter on that so it didn't hyperinflate. That way, the US doesn't have control over the ruble. Now, the Russian government has more control over the ruble, and they used what they had. They used their commodity base in oil to help increase demand, and they use gold to help manage that via the gold market, and allows them to slough off their excess currency for what? For gold. So they create new currency to handle that oil trade, and they slough it off and buy gold, a value for it. So essentially their excess gold profits are now going into gold, and that gold is being used to capitalize their system. So it's a brilliant plan for Russia to get better value for their oil, to store those oil profits into gold, and to stabilize their currency. And I see more of these types of systems being developed, not only within existing nation states, but across nation states in Asia, in the Middle East, parts of Eastern Europe, South America, and in Africa as well. That's a large part of the world's global trade, and it's being done outside the dollar. So this is part and parcel of the system that will eventually see the dollar removed as world reserve currency, as every existing fiat world reserve currency in the history of man has eventually fallen. So too will the dollar. This is just another step in that. And this is one of the threads and the themes that we weave in our show, is to talk about these things, because it's going to affect what gold and silver are going to get much more robust as a result of this, because people want something that's going to store value over time. And what are the central banks using to recapitalize the banking system? Gold. And what is Russia using to help facilitate its currency trade? gold. And so a lot of what's happening there is basically the reemergence of gold in the system. People are developing new systems capitalized with gold, governed by gold. So gold is being used to reset the world currency system away from the US dollar-dominated system into something else. And gold's going to facilitate this freedom of all these other central bank currencies to trade. And I think that's going to happen when we're ready for the central bank digital currency era. It won't be a bunch of paper currencies that eventually replaces gold. It's going to be central bank digital currencies and these new transmission systems that are being developed like CCPM that allows that trade outside of gold. Of course, we're also going to see a much more adoption of smart contracts in these trade contracts, which line up perfectly with a central bank digital currency or a private crypto to facilitate that, because those two work hand in hand and actually can be bonded together from a technology perspective. I wanted to take a moment and talk about our sponsor for the show. I'm going to present to you Rock Ridge Resources. I really like them. They're my watch list pick for an up-and-coming gold producer. They also have a big project called Knife Lake, which has an established resource of millions of pounds of copper. So it's gold and copper, and it's polymetallic. That's a little bit more established, and they have that resource, which they're continuing to drill out and to highlight. But the one I'm really excited about, and their second project is more of a gold project, and it's in the city of Timmins, accessible by highway. It's in an established mining area. Here's Kirkland Lake. Everybody that's been in the mining sector knows about Kirkland Lake, Val d'Or, Timmins, Sudbury. Well, in this area of Canada is a very well-known greenstone belt, which a lot of precious metals has come from, base metals has come from. And so Rock Ridge Resources has 100% owned project out there. They don't have any royalties or streams on it. They control it. They're fully funded for our current drilling program. But I wanted to talk to you about what they have. This gold project is large property covering 2,800 hectares, about 110 kilometers southwest of the gold district of Timmins. It's in the Archean-Swayze Greenstone Belt, which is a part of the Abitibi Greenstone Belt, which hosts the Timmins and Kirkland Lake gold mining camps. Abitibi, by the way, is super huge within Canada, providing most of the resources, not only gold, silver, but other base metal resources. If you're in the Abitibi, we say you're over the target, you're on strike, because your chance of hitting something in there goes way up. It's such an established and important part of the Canadian production of not only precious metals, but base metals. Some limited historical exploration campaigns done in the past were conducted on the property. And prior to 2020, about 10 years ago, there was one done. There was a 2020 exploration program done that had 8 meters of 6.5 gram gold per ton near surface, which is extremely good. Another one is 2,070 meters were drilled in 2020. And this hole in particular is what's got everybody's excited. It's RN 2006. 28 grams per ton of gold over 6 meters at only 95 meters down. That's critically important. At near surface like this, you can make money on about 0.5 gram per ton gold if you're able to do like a heap leach, low cost mining method. That can make some money. They're sitting at 28 grams per ton. That's over 50 times what the base you need to reach profitability. So if they continue to have these results in Rainy, this will be a highly profitable gold project. More than likely, a major or mid's going to come and buy them out, but they could go on to end up developing it. We do have an interview coming up on Monday, Mining Stock Monday, with the CEO of Rock Ridge Resources, where we walk through in detail if you guys are interested. I like this one because it has broad intervals of higher concentration of narrow quartz veins, which means when they're mining, they're going to have less overall waste rock and a higher percentage of gold in there because they have broad intervals of this. It's not just thin vein mining. They have some narrow veins, but they have broad intervals so they can focus that mining, and it's going to reduce their overall costs. They're also near the Borden mine owned by Newmont and IAMGOLD's Côté development project. So they're on strike and in the same area as a lot of big majors and mid-tier gold producers and are a famous part of Canada. Great management team, some previous drilling there. And don't forget their Knife Lake project, which has a ton of copper and gold that's had more drilling on it, actually had a feasibility study on it done, I believe, that has prior mineralization of indicated and inferred resources. So just looking at the valuation of this company compared to what they have is very low. Their market cap about $5 million. It really needs to go up given what they have, especially they're about to have a lot of news flow. So stay tuned to that. That news flow is going to come. I think they're a really good target for you. As we get back into the age in which mining stocks are going to do good, we had the Huey and the other gold mining indexes kind of pop up there for a while and they fell down, but I think they're going to come back up because gold, silver has been elevated, gold and silver price. And as those stay elevated, people will get back in the mining stocks. And I think we're in the very edge of another mining stock boom. And so this is when you want to start looking at these companies. Do your own research, your own due diligence. We don't offer financial advice. But if you're interested in Rockridge Resources, I do recommend them. Do your own research on that before you invest. But they're a pick for what a company I think is going to do exceptionally well. 2 projects instead of 1. And that means on their valuation, they tend to capture more of that valuation on the stock market than do the single project ones. I'm just going to put up their ticker here real quick. Rockridge Resources. You can find them at TSXV under ROCK. Here in the United States, OTCQB under RRRLF, and Frankfurt, Germany under RRO. And that market if you're interested. Okay, once again, to encapsulate this, we're doing a thread of de-dollarization and moving into central bank digital currencies within the channel. As a part of that, we talked about Iran and 9 Asian central banks adopting Iran's CPM system over SWIFT and the dollar for the stated purpose in the news, the stated purpose of getting rid of the dollar in international trade. They're de-dollarizing by admission. So those of you who don't think that this can occur or that the dollar remains strong forever, note that other countries around the world that are in the petrodollar system are relinquishing that system, developing their own systems. A lot of that was instigated by the U.S. sanctions as a result of the Russia-Ukraine war, as a result of other sanctions and foreign policy. I believe the U.S. is alienating these other nations. It's forcing them to other currency agreements, and it's accelerating de-dollarization, and that's what we have occurring. We're going to continue to follow that thread on the channel as we move along and provide you more research reports. And as well, stay tuned to the channel tomorrow because we do the weekly market update where we give you our analysis of gold and silver, the major news of the week, the major economic data, and just get you all wrapped up at the end of the week and ready for the next one for next Monday. Stay tuned to the channel for that. We'll have that tomorrow. Until next time, this is Rob 𝘾𝙀😞 from 𝑔oldsilverpros.com.
Hey, thanks for watching. We selected these videos just for you. Check them out. And remember, $4.99 a month keeps the lights on and the channel going. So join our Gold Silver Pro supporter membership. We appreciate your support. Keep stacking.